That precious moment, that minute that your firstborn child comes in the world at the hospital, you see his beautiful little face. I can guarantee just a few days later or a week later, you're getting that little Gerber life insurance thing in the mailbox, right? Telling you, hey, buy life insurance for $11 a month on your precious baby. And you think, okay, should I do it or not? Well, that's exactly what I want to talk about today is, should you be beyond that kind of life insurance, or what is the best kind of life insurance? And specifically what I really want to address is whole life really a good investment for your child? All right, first and foremost, whole life is not an investment. It is a death benefit with a savings vehicle, but never, ever, ever confuse it as being an investment. There are other things that are investments, but this is not one of them. In fact, I would get in trouble for telling you this is an investment. So although that's what you were searching for or hoping for, I'm sorry, it's not an investment. But having 8 kids of my own, I bet I kind of know what you're looking for, right? You're trying to figure out, what can I do? What can I build for my kid to create a better legacy? Maybe it could be for college savings. Maybe it's something that's down the road. Maybe they don't go to college. Maybe they just need some seed money to start that business or to get married or whatever it might be. Give them a great leg up in life. That's what you're worried about. That's what you're concerned about because you want to get them something amazing. Well, this is not an investment, but it can be an amazing tool for you to save up in so that you can either invest or just have a great savings vehicle for yourself and most importantly, for your child. All right, now you get those Gerber policies in the mail. What are those? They're basically just cheap term insurance that covers your kid. The truth is that your child, they have a really high likelihood of surviving, which is why it's so cheap. But those term policies, really when it starts to renew, not worth it. Those things get super duper expensive. Will it fill a need right now? Yeah. But I'm telling you, there are easier ways. There are better ways you can use your money if you're trying to save for your child. That's why I use whole life. Now there's universal life, there's some of these other options, but I'll tell you that whole life is the most certain because it doesn't gamble in stock markets. It's actually something that pays at least, lately, it's been paying at least 5 or 6% a year. Those rates can change, but the guarantees are at least usually 3% a year. So you've got something that will pay you much better than a typical savings account. In many cases, better than a CD, and you don't get taxed on that money either. So it is a way to build it up. Now, are there insurance costs coming out? Yes, there are insurance costs that do come out, but I know that the way that we design them on this max ROI infinite banking method that we use, usually it starts paying for themselves within a few years anyways. Usually by year 3 or 4, it's making more money than what you're putting into it at that point. Now, some people will talk to you about universal life insurance. They're like, wait, but you can make big market returns and you can invest, so to speak, right? Here's the thing, whether it's variable universal life or index universal life, either way, it's tied to the stock market. Now, a universal life policy could maybe make you more money than a whole life policy, but here's the risk, is that what if the market goes down? Now, some of them will have protection against market losses, but they're still pulling out those costs, and those costs go up every year. So if you have a couple down years in the market, you could actually be losing money even while you're trying to put money in. That's one thing I've noticed, especially long term, those things do not work well. Like I said, if you're at the bottom of the stock market and the stock market roars like it did the last really 15 years, if it does that, you timed it great. But here's the thing. If we've only had one down year in the stock market in 15 years, when normally there's about 2 years up, 1 year down average, that means 14 years up lately, 1 year down. What do you think could happen over the next 10 years? And none of us totally know, right? We never know what's going to happen in the stock market, but isn't that the point? We don't know. And if the market doesn't perform well, you could actually be making a lot less money in these things than you could with whole life. So for me and my family, even though I could get universal life set up on ourselves, no problem, I don't. I just don't trust something that I have no control over. Now, do I have all the control over whole life? No, but I have a lot of guarantees in place that ensures that I will always be paid, and so will my kids. That's what I go for. And it's up to you what you want to do. You can even do a little of both, right? You're like, hey, I can gamble with one and then have the other certain thing too. That's fine. But I'm just here to tell you that I personally don't like to gamble with my children's future. Do you? Now, I'll give you another warning. Even though you can tell I'm in favor of whole life, I will say this. Not all whole life policies are made equal. The problem is this, is that different insurance companies have different ways of using it and different agents have different ways of designing it. The design of the policy is much more important than just the company. Although the company does help, right? It's the insurance agent that makes the difference. The problem is this, is that most insurance agents are just like financial advisors. They're paid to sell you crap, not make you more money, right? They're just that. They're insurance salespeople. They're not really caring about the future as much. Now, they might care about you to some level, but the truth is that they're just trying to sell you something that may just pay them more money, and that's what they're offering to you. And here's the other problem. Insurance companies, just so you know, don't even care about teaching insurance agents how to manipulate the system, how to give you more money that can help your child have more in the future. They don't teach us this. I know, I've been in insurance license for 22 years, and I can tell you insurance companies love to keep their agents and their clients in ignorance. But if you start to understand, and I've spent really the last 15 plus years really strategizing, almost 20 years now, trying to make this better, there are ways and buttons and levers you can pull to make it pay you more money, but as a result pays the insurance agent and the insurance company less. And that's the secret, guys. The reason that the insurance companies don't want to teach this and why insurance agents often won't do the best thing for you is because, as one told me personally, they can't afford to cut their commissions. They feel like their livelihood, because that's how they make their money. They don't have passive investing going on the side where they don't even need the money from the commissions like I am, right? They're like the ones that are just, seriously, all they make their money in is selling you insurance. They're good salespeople, but they're not investors and they're just trying to make a living. They have every right to do that, but not at the cost of your family. And even if this person's like your best friend, I will tell you this, the best thing you could do for your best friend, especially if they're not giving you the best deal, is to not do business with them. I actually told this to one of my friends who's an accountant. I told my friend, I said, listen, I found this other accountant over here. He does better work than you do. If you don't learn what he learns, I'm not gonna use you. I'm gonna fire you and use him. And you're my best friend, but I will fire you because my family is more important to me than you are. Sorry, but I do prioritize my family. The good news is he actually woke up and ended up working for that other guy, and then he ended up taking over that business. I would hope the same thing with an insurance agent too. If you have somebody that you really like, but you're not sure you're getting the best deal, I would actually recommend this. Go to moneyripples.com. We actually have an infinite banking section. You can schedule an appointment. You can actually see whether or not they did a good job. Because the one thing we guarantee, we do a good job every single time. But back to the subject matter at hand, just know they're not all equal. Like, it's really based on how the agent designs it, and that's the confusing part. And really the only way you can find out if it's better or not is to get multiple quotes to figure out, hey, what does this look like? How could I do it better? I actually, right now, we're working with a client who wants to put away not just like $5,000 or $10,000 a year like a lot of our clients do for their kids when they do whole life. This guy, he's in the dentistry, right? He's an orthodontist. He's like, I want to put away $40,000, $50,000 a year for my newborn daughter. And we said, awesome, but your newborn daughter is so dang cheap with her insurance that we can't just dump in a ton of cash all that we want because it'll buy her like his $5 million death benefit, right? More than he's got on himself or his wife. So what we did is we tried to play with the numbers. We're like, well, with this one company, we can do $20,000 a year max. This other company, we might be able to do more, but they're gonna make you jump through more hoops. And so we're now weighing the options to figure out, can we do more or not? $40,000 a year might be a little tough. But just so you know, we got a lot of people that actually will do this instead of college savings because they know they actually have more flexibility with it. It's not gamble in the stock market. And honestly, everybody I've talked to that has a 529 plan lately hates their 529 plans. Unless they're using it for high school and they're in high school right now, they would much rather not gamble all the risk in the market and have it working somewhere harder. Where that's what my clients do in many cases. They'll say, I can use the cash from my kid's policy, right? Because you own it, you control it, it's your money, and you can use that to go buy real estate investing. You can go buy real assets with it, generate returns that can actually start to pay for college with the cash flow from the investments versus just waiting for that savings account, that tax-free savings account called life insurance to build up and grow. Now you can do either. But the great thing is that yes, you can make money there, right? Because he wanted $700,000 or $800,000 by age 18, but you can also go and invest with it, make more money with it, potentially, and be able to have that same money be able to pay for their college. So there's a lot of different ways you can go about doing this. So how do you decide how much you actually go and fund? I mean, you're probably not gonna be dumping $40,000 or $50,000 a year for your children each, right? So how do you decide? For yourself, if you're just doing it for yourself, it's a little bit easier. I always recommend people get it on themselves first, children second, right? So if you're gonna do that, make sure that whatever your cash flow is every year, if you've been putting away, say, $20,000 a year in a 401k and you wanna do this instead, which a lot of our clients do, well, great. Well, you might still put $20,000 a year into this as a max contribution amount, knowing that the minimum is much less. Now, depending on your age and health, it might be about anywhere from 1/4 to 1/5. So if you try to do a max of $20,000 a year, the minimum is probably in the ballpark of $4,000 or $5,000 a year. Now, for a child, because they're so much cheaper, right? For children, it's about 15% of whatever the max is. So you might set up to say, I want the max contribution amount allowed each year to be $10,000 a year, but just know that you're only required to have to put in $1,500 a year. So there's a lot of great flexibility when you have child policies. Again, it depends on your budget and what works. I would not put all of your money into these plans. You still want to have a little buffer there, even though you could lower the contribution amounts because there's a max and a minimum you can do. Just know that the best way to find out what's best for you is, again, go to moneyripples.com. We can run the numbers for you to see that real situation. So the ultimate thing about deciding what to do with your child is this. What do you ultimately want your money to do? For some of you, you just want a safe place to put it. You don't even care to look at it. You might just go with a simple bank savings plan, right? You might make a little bit of interest, but not much. You might do this whole life. You might do infinite banking where you can make at least a 4 or 5% net compounded rate of return tax-free. You could do that too. I mean, there's so many options that you could actually be doing. You could do a 529 plan and gamble it with the market. You could do both for that matter. The truth is, you should do what you feel is best for your family, right? That's what you should do. I know what I prefer because I've done all these kind of strategies, and honestly, I like to use my policy, but then I also like to invest to generate more. So I'm not just creating a possible college fund for them, which, by the way, if you have a 529 plan and you don't use it for college, oh well, too bad. You might get taxed or penalized on that money for trying to use it for something else, right? Instead, I like to use something that's more flexible. That's why I use whole life. I also like to invest in other things like real estate. I like to create a legacy that goes beyond just college savings. I want something that passes on generations of wealth, that passes on from generation to generation. And the cool thing is this, guys, if you're getting a plan for your child, you can set up your own family trust that you can pass on your wealth, but you can also have that plan for your child paying into that family trust as well to ensure that that family wealth can continue to grow from generation to generation rather than creating a bunch of entitled trust fund babies. You can actually create massive wealth later, but you can actually make use of it right now as well. That's why I like to use it personally. Again, like I said, if you have questions on this, go to moneyripples.com, click on the infinite banking section and book a call today.